What's going on, everybody? It's your boy Jaden Trades with Team Bull Trading. Today I'm going to show you how I made a little over $2,400 in a matter of about 5 minutes, the day trading strategy that allowed me to do this. And not only am I going to show you that strategy, but I'm going to teach you about it and show you some ways that you can use it to your own trading and to your own advantage as well. So without further ado, let's dive right in. Now, in day trading, there's a lot of different strategies. There's 100 different ways you can make money, but this has proven time and time again to be one of my favorite personal ways that has a very high probability and has an overall high success rate for working. Now, what this strategy is called is the ORB or ORB. Now, that's short for opening range breakout. For those of you in the Pro Discord, you know that I reference this strategy a lot. I use it almost every day. And, for the last few months, it's been hot. The thing about day trading that you have to realize is that, not every strategy works forever. You might have a strategy that works for you for 6 years and then doesn't work for the next 6 years. You might have a strategy that works for 6 days and never works again. Trading is very uncertain. So that being said, this has been a very hot strategy. It's worked for me well the past 2 years, and I'm going to keep running it up, using it to my advantage, and teaching it to people such as yourself to use and to hopefully better your overall day trading experience. So the ORB, the opening range breakout. Here we have our chart for Boeing, ticker symbol BA. Now going into the day, as you'll see here, I had this on watch as we had a level I was watching pre-market over 211.5, as we'll see here when I pull up the 5-day, 5-minute chart. We were watching this pre-market for a level to day trade, and we had some overall strength pre-market going into the day. So as you see, we went up a little here, made this pre-market high of 211.5, dipped down, so I was watching for us to reclaim that with volume to take it for a day trade. Now you see here, let's dive in closer. In the first 5 minutes, we climb up to this 208.5 level and we retrace down. As I seen this around this candle, I realized and saw that this was setting up to be a perfect orb or an opening range breakout. Now, what that means in theory is that we come up, we touch a certain level in the first typically 5-10 minutes, we retrace down, we come around, we loop around right here, and we reclaim that level with volume, of course, and we burst past it. Now, what that means in technical terms is that we came up, sellers took over. Buyers couldn't hold the price up. Sellers took over, sold the stock down. Buyers stepped up, tried to bring it back. We got rid of those sellers the first time in this area, and we ripped through it with volume. As you can see here, at this 208.5 level, I put that I was watching for an orb. I was watching Boeing over 208.5 for calls. So we came down, said that right around here. We ripped up. I took a position right here. Now, if we look at the chart, you see that we ran all day long. Right, we got in right around here, as you see I'll mark on the screen, got in here. I took my profits right in here, as I'm a day trader. This is typically how I trade. I like to get in and out. Now, I know that some people, might be working or you might be a slower trader, and that's okay. This was a perfect trade. We had no drawdown. That's what we like to see. Now, does every trade go like this? Absolutely not. This one worked out beautifully. This was a perfect example of an orb or an opening range breakout strategy play with 0 to nil drawdown. Now, sometimes we'll go up, we'll retake this level, we'll come down a little bit, we'll shake out some weak hands, and then we'll rip up. Not the case here. We came up, I took my profits in here, and of course, we came up to here, we had a little selling, had a little profit taking, and we continued to climb the rest of the day, making sort of bull flag after bull flag, as we see here. Now, I wasn't participating in any of these moves the rest of the day. I made my money, I made my 2,400 here. I got out and enjoyed the rest of my day of watching, talking to the team, and watching the overall market. Now, let's dive into the psychology of why this happens, right? We went over earlier how we see that we came up, sellers took over, buyers stepped up, and, sellers can take over here again. Now, why does that happen? Typically happens on strong stocks, right? They come up, we have some profit taking it open, we come down, the overall bias on the stock is still bullish, we rip back up, reclaim that level, and then it shows in the overall market in the particular stock name that we have strong momentum. This is why this is one of my favorite strategies. It also gives us a nice area that we can, see. If we reclaim this and we show clear weakness, if we close below, let's say this previous candle's low, we have a nice stop loss area. So not only is this trade a high probability trade, probably works 70-80% of the time, it gives us a nice area to stop out if we're wrong. Because yes, in trading, you will be wrong sometimes. No strategy, I don't care who you are, if you're Warren Buffett, if you're Ray Dalio, Jeff Bezos, whoever you are, how smart you are, you will be wrong sometimes. Now, the key to trading, to dive into a little trading psychology, is that you have to have small losers and big winners. That's what's going to separate you from the next person constantly getting beat by the market. We have to accept that we're going to lose sometimes. We have to get emotion out of the picture. We have to learn to trade without emotion, to trade to our principle. So, those that watch me every day, see that, Jay Dunn, how are you able to be profitable? How are you able to have 3 red days in the last few months? And it's because I keep my losers small, my winners big, and I'm okay to admit if I'm wrong in a trade. Now, I've been picking my trades very selectively. I've been blessed. I've been trading for almost 5 years to have a pretty good grip on it and to, know when a trade's not going to work out and know when to not take a trade. But there is times, and there will be times, that I'm wrong. And so, if this trade wouldn't have worked out, I bought in here, I would have stopped out down here. The risk to reward was there. We climbed up. We had our level of 211.5 pre-market. I should have ended up taking this too, but I didn't. I secured my gains and I walked away for the day, as that's what I typically try to do. I don't like to overtrade. I don't like to boredom trade. I don't like to revenge trade, and we called it a day. Now, just to go into a little more teaching, that's something I think that could also help you guys out, is we see here that we had this pre-market high of 211.5. Now, what do we notice from the chart here? Right, we come up, we touch this level, we barely break over, and we dip back down. This is what we call shaking out weak hands. Now, if you were watching this, if you hadn't gotten in the orb, you probably would have seen this go over by 3-4 cents, gotten in, and thought you got false breaking out. So we go up, we climb a little above, you buy in, stock tanks, and you're left thinking to yourself, oh crap, another trade that I get in and loses. So, you probably would have gotten stopped out on this. There's no doubt about that. A proper trading plan would have stopped you out, but you wouldn't have entered this trade at first if you would have followed a trading plan of seeing, we need volume. We had volume, but we didn't close this candle. There's a good chance that the bids on this didn't get above that 211.5. So, we always want to make sure when we're watching a level that the bid as well as the ask are over our current day trading level or the level we want to trade. If our ask goes up to 211.53, but our bid's still at 211.43, we can't enter yet. That's not a trade that has confirmed. If the bids get above but we don't have volume, trade hasn't confirmed. Let's say those both happen. Let's say we go up on this and we climb to 211.6. They both go over, and it false breaks out. That is something that's going to happen sometimes in trading. So learn. Cut your losses early. Right here, excuse me. And then you could get the second entry. Watch that loop around. Shake out some weak hands. That continued volume here, and get in for the second breakout, which would have paid very nicely. So that's another tip, another trading tip I think could greatly help you. Something that a lot of traders struggle with that I see every single day, struggle with that exact problem, and that's one cure, I guess, to fixing it. So in conclusion, it's very important that we always A, follow a trading plan, B, realize that hindsight is 20/20. It's always easier to look back and say, oh, I wish I would have done this, I wish I would have done that, so on and so on. And C, to make sure that we have a game plan, trading plan going into every stock we trade, and realizing that we can be wrong sometimes. You can still be consistently profitable over time if you follow these simple guidelines. So if you have any other questions, hit me up in the comments, tag me, let me know what you want to know. If I can answer any more questions about the orb, I'm happy to do it. My Instagram is jdunn_trades. TikTok is Team Bull Trading. Make sure to hit that subscribe button and be prepared. Be ready for a boatload of content and other helpful things coming your way. Hope you all have a great day. Keep trading safe. Keep trading smart. Team Bull.